This is the Friday, May 8th, 2015 version of the Market Plus segment. Joining us now is Mark Gold. Mark, welcome back.
Nice to be back.
And we are glad to have you. We did not get a chance to discuss cotton on the program. Tell us your thoughts on that market.
Well, you know, the cotton market, to me, looks pretty good in here. You look at the chart, it tells me that we're trying to build a long-term, nice, broad-based bottom in this market. And this is typically a kind of bottom that could lead to a more extended, higher prices in the future. Now, fundamentally, I don't see anything that really would justify it. But as my experience has been garnered in over 40 years in this business, I would say that generally a market is led up first, technically, before the fundamentals can justify it. So can we see this market move higher and then maybe get some news of why it's moving higher? I think that's certainly possible. But at the moment, if you've got some cotton sold, I'd certainly look to buy back some call options to try to keep the upside open. Now, the risk is certainly back down to 40 cents in this cotton. So you've got a 25-cent risk in here. Is that worth protecting with a put if you haven't got anything sold? It is. But in the meantime, I'm looking for some higher prices.
Now, looking at just the technical situation, what would be the first level of resistance you'd expect to hit?
Oh, between here and 70 cents is going to be tough. And then it always gets tougher when we're in the 80s, from 80 to 90 cents. But I don't know that those are outrageously high targets considering where corn's been in the past. And we're coming off some pretty low prices. We made pretty good bottoms where we should have. And again, I don't know what's going to move it, but it certainly looks like the chart's trying to move a little bit higher.
We get some headlines and maybe it'll kick it in the pants and spur it up. Okay. Well, now also on the show, we had a little bit of discussion on the highly pathogenic avian influenza. And we've got a question here from Dietrich in Homestead, Iowa. And Dietrich is curious, with the high loss of poultry to HPAI, what effect do you think that will have on the corn and soybean meal market in the short term, which we discussed on the show, and in the long term? Could it have an impact?
In the long term, it could if this thing continues, and it continues in a big way. Now, I just read just before we came on air that not only may the pathogen be moving because of the birds and the bird droppings, but they think the wind and the dirt may be carrying it as well. If that's the issue, are we done with this? We don't know that. So in the long run, if this thing continues to move, and maybe it's going to move east, maybe it's going to move north with the winds, then it can have a longer term impact. But you have to realize we're still talking about, at the moment, some really relatively small numbers. It would have to be significantly higher, 5 times the amount of birds that we're talking about now, 100 million birds, that would really start making a difference in this thing. But it's a headline that's helped push the market down, the corn market and the meal market. But again, hopefully the warmer weather will end this thing, and then we can see the meal and the corn have a nice rebound in here.
Now, watching how the market has been watching this, and you observe the markets every day, how jittery is it? If we get an outbreak in North Carolina or a place near a high broiler production area, would that be a fairly major downturn?
That could affect it. It depends on where and how many birds are affected, how quickly they catch it, and is there any sign of it spreading in those newer areas?
Okay.
Again, it's one of these things we don't know. I'm hoping that it's over. At the moment, again, I don't think it's enough of a factor. But, you know, when we looked at the viruses in the pigs, it started somewhere, and it kept going. And that's when we put hogs to record prices. So these things can take a while to settle out. Hopefully this settles out very quickly.
Certainly. Hopefully it's over, but we'll have to wait and see. Now, we also talked about beans a little bit on the program, and Phil in Ontario, Canada, has a question. He says there are seemingly soybeans everywhere. So how low could futures go this summer? And he's curious, could they go sub-9, and can they go sub-$8 levels?
Make no doubt about it that there is still tremendous risk in the soybean market. As he says, whether you're in Ontario, Canada, or whether you're in Champaign County, Illinois, or whether you're in Brazil or Argentina, there are a lot of beans out there. The Chinese demand has been okay, but not nearly as good as it's been, in my opinion. And the Argentinians are sitting on 14 million metric tons of beans. They're not even done with their harvest. What's the total number down there? We believe that the Argentinian crop, we will see it on the WASDE report on Tuesday. The USDA should raise it somewhere between 1 to 2 million metric tons, and we believe it's closer to a 3 million metric ton bigger crop than most people are thinking. So he's right. There are a lot of beans out here. How low can low go? I believe if we grow the crop here in the U.S., we get this crop in the ground, record acres, we know what these yields can do with marginal weather. We don't know what these yields can do with great weather, and if we add all this together, in my opinion, it could be sub $8.
Okay, by harvest.
By harvest.
All right. Well, now you mentioned the Tuesday WASDE report. Before we let you go, Mark, do you have any thoughts or anything producers should be doing before that report comes out? What do you expect?
Well, at this point, do I want to be buying puts at 365 corn? Probably not if you haven't started already. You hope to see something positive out there. Are they going to increase the carryouts because of what's happening in the poultry industry? Maybe just a touch. Are they going to raise the yield potential because the corn is going in so early? That's possible. So if I was going to do anything, I would look at a very short-dated put just to get through the report. Don't spend more than 8 or 10 cents, but in case there's a shocker out there, you don't want to be looking at corn at 365 going to 335 and just sitting there and holding your breath, because then if we do have good weather in June, you could be at 280 or 290 by July 1st. So while the charts look good, we made a little bit of bottom, we have to hold the lows that we made Tuesday morning. If we don't, this corn market's in trouble. So I would still have, as a risk manager, some kind of cheap put on at this point to protect it in case there is a surprise.
All right. Mark, well, thank you so much for taking the time to join us.
Nice to be here again. Thanks.
And thanks to all of you for watching over the weekend. Happy Mother's Day to all the mothers watching. And we hope you have a wonderful week. Take care.